Good morning, and welcome to another edition of Roadhouse Last Call, your morning show that gives and gives and gives. What it gives, we do not know, but it most certainly gives. Good morning, everyone.
Good morning.
It's Binda.
Good morning. I, it's almost like when you're always excited when I'm here. I'm here every day, but I appreciate the enthusiasm in the morning. It wakes me up a little bit.
It's like, let's be honest. It's like, if you're being totally honest, am I probably the one person in your life that is the most excited for your presence? I am just
No.
overwhelmed with joy.
No.
Whenever the bender is around, that it's just like, oh my God, we get the bender. Oh,
Yeah, I know you don't have kids, but they're still at that age where they're excited about my presence.
you keep on making homeboy cut the yard with scissors, and that ain't gonna last too much
Well,
longer.
this is true.
And don't forget, with all of that, he will be responsible for picking your old folks home. So there are things that you have to.
Yeah, I'm gonna have that shit locked in before I ever get close.
Excellent, excellent. You have a good weekend?
Yeah, I did. Besides, we are setting records. I know there's records being set all over the place, but as of, if the forecast is correct, this will be the hottest June that we've had, which is like 20, something like 21 days in triple digits in the month of June.
It's crazy.
Yeah.
People said to me, "Move to Texas."
Dude, it's been just so damn hot, and for us to start this project on this land and be clearing trees and stuff like that, it's every day I go outside. I mean, it's not even 8 o'clock, and I walked outside. I'm like, oh my God, it's already hot.
I remember those days, man. I definitely did. So growing up in Houston, I used to cut mow yards. So it's bad now, but it's like that August time period is when it's just like everything is just like it's unbelievable when that humidity bakes in and everything else is. Yeah, August is like, ugh,
Oh, well, thanks.
brutal.
I realize it's only late June, and it's been bad enough. It's
Here,
been
I'll,
bad
I'll
enough.
flip it for you though, because this weekend we dipped into the 40s up here at night, and we were sitting here contemplating whether or not to go ahead and fire up the get the fireplace.
Shut up.
Like seriously,
That's right.
like it was one of those things that we were just sitting there just going. But we're like, if we do that, everybody within 5 miles are gonna know that we're fucking morons.
Absolutely.
Sitting here cranking the fireplace in June.
We'll talk like September, October, and we'll see how things are going.
Yeah, no, everybody keeps on saying, oh, so you've never experienced a winter up here.
Yeah.
It's like, yeah, no, neat stuff. All right, so let's get into some of the headlines and things that are floating around. Everything is rates, more rates, more rates, more rates, and the impact of the rates, which ultimately is going to play out in a massive game of chicken between data, recession, and the Federal Reserve. That's where we're heading. We are on a collision course for something to give as far as rates and the economy and the impact thereof. It's fairly interesting, especially if you want to dig into that Lennar report. They reported this morning, put really nice earnings. It's like really nice earnings. But one of the things that they said is that guidance is more like guessing because of the impact of the Fed. That was the quote. Guidance is more like guessing at this point because they're not real sure how the Fed will impact their market. They do not think it's going to be a good impact, but he does believe overall that because of the shortage in housing in the U.S. that it should be okay. He also made an interesting comment as far as the relationship between price and interest rates, and it's going through a current rebalance. Basically, that they're not seeing home prices spike, but they're not falling either. They're just kind of leveling out a little bit. So that'll be interesting to kind of watch. There's a lot of conversation as far as, really, really digging in over the weekend over the rates, getting an understanding of how far can they go without creating a negative impact on the economy, flushing us into stagflation, and then ultimately putting us into a recession. That's there. A couple of analysts have raised their expectation of a recession by 2024. Biden stepped out yesterday and said it's not inevitable, which, I don't even know what the hell to do with that. So yeah, that's where we're at. Nice and rosy, pretty picture. And we can expect that to be the case until we get an understanding of how far the Fed is willing to go before they pull the brakes, pump the brakes on their activity to keep us from going into a recession and then ultimately reverse course. So from a data standpoint, we have home sales coming out 30 minutes after open. We also get new home sales on Friday. It'll be interesting to watch those data points after that Lennar report, which was good. We have Powell testifying tomorrow and Thursday. He's going to be talking about economic outlook and their recent monetary policy actions. So that should be nice and cute. Thursday, we get initial jobless claims. Also had, more and more labor basically saying, we don't like what's going on. UK, basically, their rail workers have gone on strike. It is the largest strike in the last 3 decades. And it is anticipated that anywhere from doctors, lawyers to baristas will be joining them on the strike if they don't get what they want, which ultimately is more money and or the cost of everything going down. Right? So do we see a theme here? We see a massive game of chicken being played, both domestically and globally. That is where we're at. And other news, Kellogg's decided to split into 3 companies. Seems like a great idea. They're kind of fragmented on those segments anyway, so that'll be interesting to see how that plays out through time. In my opinion, there's really nothing to do there. It's just like neat, cool. Okay, let's see how it shakes out when they do actually split into their 3 companies. Finally, Sunrun, basically the domestic behemoth as far as solar power. They rose 2.5%. After Goldman said that they're remaining interested in them, and they downgraded the competition SPWR SunPower. So Sunrun, yes. SunPower, no. If you're playing that, and they've both had gaps in opposite directions this morning. Put up a couple of graphics in Roadhouse this morning as far as the dollar. The dollar being basically considered a global stagflation hedge. Everybody's gobbling up the dollar. Gobble, 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 gobble. And if you're looking at if you're charting the dollar out, it is absolutely vertical beyond vertical. Then you also want to take a look at another chart that was posted in there, how, its relation to the yen is about as divided as it's ever been historically. There will be a reversion to the mean at some point. Don't know when that is. Right now, everybody is selling and shorting every other currency on the planet, and they're playing Pac-Man with the dollar. That will not last forever. The question is how much more do we get on that? How much more of a divergence do we get within there? So that's all I have as far as that, Mr. Bender. Tell us about our levels. Tell us where we're going. Tell us exactly how to play this gap to where we can make $8.5 trillion. This is what I want.
Well, what I want is for you to take a look at this chart that I'm posting right now. Okay, you should see that. So on the bottom you have weekly candles going all the way back to 2008. And above is the same chart, 13-minute time frame zoomed in. So you can see, and this is the same parallel channel we've been talking about, but just for anybody that might have missed it or an update on where we are, you can see on that weekly chart this parallel channel going back to where I have the number 1, the number 2, and then the number 3, the number 4, and number 5 is where we are right now, right? So you can see how that coincides with that yellow line on that 13-minute chart, and where we kind of, rejected there 45 minutes ago-ish. And the reason I want you to look at this is because the first level that I'm going to give you is 37.36. So 37.36 is right there at that upper trendline resistance. It also happens to be the 20 MA on the 60-minute. So that's a big, important level. 37.36, right in there, right? 37.34, give or take a couple points, but I think we get above that, and you start to watch for, that to. They're going to try to hold it. If it's above, anybody that is looking at this that is thinking, okay, this is a good spot to bounce, which it is. If you go back to that weekly chart and you can see, if this area doesn't hold, then we're probably going to go back down and retest, 3,500-ish. So they're going to want to hold it in here. They may not be successful, but I think that's a pretty important line. So below that, we got 37.26, and then 3,700. So 37.26 is the let's see, I've got 37.27. So 37.26 is where it was. It has moved. That is the 20. Where did my notes on 37.26? That was the line that I had, but I don't have any note next to it as to why at this point. So I'll have to come back to you on that one. So we got the 37.35, and then 37.26, 3,700 to 3,705. That's where your 50 MA is on the 60-minute, and below that, 36.80. I don't have a whole bunch of line because of the move that we made down last week. I could just, essentially say, okay, well, you got 37.50, 3,800, 30.40, but that was a pretty aggressive move down, right? So there's not a whole, and I bring that up because there wasn't a ton of action and structure that was built into that move down. So, if we do get any sort of real push up, you wouldn't expect those areas to, act as significant resistance because there wasn't really anything that took place at those levels. So
real time spent.
Yeah. So it's hard to put any sort of real, importance or significance around those. The other thing that I'll add, anybody that doesn't use Bollinger Bands, if you throw them on a daily on ES, we are, at the lower Bollinger Band. So this most recent move down was near the top or the upper band. And we, fumbled around for a week and a half near that upper band, and then, made a pretty strong move down. So, being near that lower band, I wouldn't be surprised. I'm not surprised by the bounce that's coming in, but we could see a continuation of this bounce. Realistically, up to 4,000 if they want to do it. And given that there's not really significant resistance on the way up, if they decide to push it, they can make that move pretty quick, I think. 38.50. So yeah, that's what I got. I think that the most important one is that 37.36.
Yeah, I certainly agree. It's like, I think historically, when we start looking at this type of stuff in these charts, it's like, I don't know if you saw the chart I put up on Friday. You know that I'm a wizard when it comes to charting, that I'm like the greatest ever.
Absolutely, yeah.
We
Best
know
ever.
this. The bestest-er. It's like, but the chart that I just posted, and it's very, very basic, but if we go back, and that pink line right there is a 200 EMA on the weekly. Okay? That very bottom line. That's a 200 on the weekly. Take out COVID, okay, that middle big dip, and go back the last time that we were running an RSI under 30, we had licked the 200 on the weekly, was the last time the Fed began QT back in 2018. There's a drop. There's a touch of the 200. There's a move higher. We kissed it on Friday. So you're talking about oversold levels on a weekly chart, on a weekly time frame. That's extreme. We're not talking about daily. We're talking about a weekly that is oversold, which is pretty significant when you start looking at this. So when you start talking about, hey, there's not a lot of structure up there to keep us getting from 100, from a technical standpoint, there's not a lot just from it being oversold and where it's bouncing, the power of the 200 as far as moving it back in that direction. Ultimately, flow is going to kind of give us an idea. Are we still hitting 350 puts, or are we buying 400 calls? What's coming through the machine? It's like that's kind of what's going to point us in that direction. But I found this chart to be absolutely intriguing from a historical standpoint. Most recently, we go back to that October timeframe, 2018, running all the way until Christmas Eve of 18, and then we get that bounce and run. So Fed non-accommodative, we have QT, get the blitz, and you have COVID. No accommodation from the Fed, then we get accommodation from the Fed, we blitz. Right here, the top of the top, Fed removes the put. Fed says, we're going to fuck you all in the butt. And here we are right back to the 200 on the weekly. I found that to be extremely interesting, but Bender, just like anything else, lines are meant to be broken, both to the upside and downside. Not everything is always what it appears to be. So thank you for offering that context.
Yeah, there's one last chart for you, and that's just zoomed in a little bit on the weekly, and you can see that that little green candle there. You can see where that is in relation to the down channel that we were in, as well as that longer term upward channel that going back to 2008, right in between, or just push just below the 2. That's why I say that this 37.36-ish is pretty important.
Very much so. So everybody have 37.36 imprinted on their noggins? Everybody has it imprinted and locked in as far as understanding of the importance? I'm hoping that we do.
And thank you for that chart, Helps. Yeah. You are a wizard.
Wizard, but this is what happens when you're getting your ass kicked left, right, and sideways as far as the market activity and trying to figure out what's next. Is you start expanding time frames. It's like, okay, so now I get to look at you go from the daily to the weekly. Now you're looking at the quarterly going, well, I don't even know what's going on. Well, see, back in 1918, there was a dip that was created by, it's just like, come on. Anyways, Stockington.
I know it's over when you start quoting Elliott waves. When you start pulling that stuff out.
Well, but here's what's funny about Elliott in the waivers. They said we're going to ATH by summertime. We're in summer, so they got some fucking work to do after getting their downside target met. It's like we got real work to get back to ATH that they said we were going to do this summer. So they said they wanted their dip so we can go to ATH by the summer. Let's go, Elliott. Where are your waivers at? Let's go. Stockington, you home?
Hello, I'm here.
Very nice.
I'm back.
Excited.
Yeah, I'm ready. So side note before getting into levels, I always jump on here in the mornings, and there always seems to be a lot of talk about chainsaws. And was cracking up this weekend. I saw some buddies, and one of them is a ski patroller. And when you're a ski patroller and it becomes the summertime, your job is chainsaws. So my chainsaw conversations continued through the weekend, and I was like, oh man, everybody's chainsaws. You guys cutting down trees left and right, so that was cracking me up this weekend.
It's a real thing. It's a real thing.
Yeah.
We're going to bring it back into style. We're going to see people walking down the street, instead of being like pistoled up, open carry, we're going to have folks with little mini chainsaws hanging off, like with a utility belt and all that. They're going to be ready to rock and roll. This is going to be a thing. And Bender and I have done this. We will take full responsibility for this new trend.
Yeah, I mean, I obviously need to get on board because I'm just surrounded by chainsaw talk nonstop. So I'm into it. I've only got 2 trees in my yard that are orange trees. They're not coming down, but sounds like I need a chainsaw. Anyways, levels. So we gapped up. I posted some new charts and just something I'll tie back for me personally in general. I'm here to learn. I got a little message on the side from someone saying learning about publishing trading view charts so you guys can all get the lines. They basically asked me to sign some life away agreement of Twitter, whatever. So I'm going to learn a little bit more about that later so that I can make this easier to share charts with you guys. But yeah, don't ever hesitate to teach me something new if you notice it. In terms of specific levels I'll be watching this morning, BABA, I've got a line at 106.85 to the upside if we pop that, and then 105.6 to the downside. I'll be looking at puts on BABA. Roblox, I've kind of looked like a longer time frame falling wedge that it has now popped. So I'll see if we retest the upper trend line there. I've got a line at 27.1 was the original call trigger. Maybe we'll come down and retest that. And then I've got some lines here around this 27 area. Had one at 27.65, and then pre-market resistance looks like 27.85. And then Apple looks like pre-market struggled around 134.55. And then aligned support was 133.4. So I'll be watching the reaction to those. Home Depot, that one caught my eye because it got a significant $715 million dark pool on Friday after the market closed, 270.73. So that jumped out. That was not the norm. With the gap up, I'm going to be watching on Home Depot 275.1 and 273.6. And then I posted here in the room a couple other dark pools. They hit Disney, they hit Apple, they hit PayPal, they hit MU. So there was definitely some aftermarket activity. I've got the screenshot shot there in the Roadhouse. But other than that, just kind of keeping an eye on flow.
And I think that flow, and thank you for that, Stockton. I think flow is going to be of maximum importance this week as far as setting the stage for that 7/15 date, expiration date. I think it's going to be just beyond important this week as far as understanding how money is being positioned coming into that date. We've had mixed flow into 7/15. So now, because if we can sit there and say, well, hey, flow's kind of mixed, but leaning bearish, now we have to get an idea, are they going to continue to lean bearish? How are these massive whale bets being maneuvered, both on SPY and IWM? What are they doing with SMH? What are they doing with the VIX? What are they doing with TLT? What are they doing with any of these, triggers or breadcrumb tickers What are they doing with Apple? Are they going to double down on those 125 puts? Or are they going to go ahead and bail on those and start hitting 140, 142 50s? It's like, what are we doing? Are we going to get Tesla, 550 and 580 puts? Or are we going to get Tesla, 750, 800 calls? What are we going to see going into this expiration? And how can we be best positioned to play it? So Bender with his charts, Stockington with his ideas, and me with my bestest of the most bestest charting skills and capabilities, almost as good as my coding, should give us some type of a game plan. We have about 15 minutes until open. 30 minutes after open, let's not forget that we have housing data. These numbers become more and more important when we start talking about the Fed. Right now, the market is all about the Fed. I don't give a shit what anybody else has to say. It's the Fed, it's the Fed, it's the Fed. Do not fight the Fed. Do not. Right now, this fight, this game that's being played right now with the Fed, we are on a collision course of just a colossal game of chicken. Who's going to buckle first? Is the Fed going to back off before they throw us deep into a recession? I don't know. Do they need a recession in order to cool inflation? I don't know. We'll find out, and we'll play it either way. Bender, thank you very much. Stockington, thank you very much. 14 minutes until open. Y'all get ready. We'll see you soon.
Thanks.